Hey Ross World, my money makes money. Now, when I tell you this vital information, do not get scared. Do not do anything rash and out the ordinary. Only stay the course. Now, the stock market will crash. Don't go and sell all your stocks. Don't do anything different except one thing. When it does crash, and it will, because right now we're in a type of market that they would like to call the bull market, where you consistently see gains over and over, and where you see gains over and over again, and the stock market keeps breaking its own percentage records. Okay, so signs of saying it crash is when you consistently start seeing the stock market do badly. Now, that's a long trend. Okay, but when it does crash, and that crash simply means everything doesn't go to zero. A crash, or the term crash, or the term bear market, is when the stock market on a whole loses about 20%. Now, that's a lot of money. But this, for a lot of people, is actually a good thing. Why am I saying that? You're like, well, I'm gonna lose fucking money. Why are you saying something crazy like that? Well, for the people I advise and I tell on my channel, I say, this is for long-term investing, okay? So keep your money in the market. You will make bank. Every single time, whether it be the Great Depression, the recession in '08, the stock market that year done horribly, but consistently after, anywhere from 60 to 250%, the stock market always outdoes itself. What does this mean to you? Those stocks that you were looking at that were $80, these individual stocks were $80, and even in your ETFs, the stocks are a lot lower. These stocks, they're no longer at retail price. They're discounted. They're 50% off. Take, for instance, you're in a store, you see some great pair of shoes, some boots, a purse, or whatever it may be. And you're like, man, that's way too expensive. I wish that was on sale. I wish it was at a clearance. That's when these stocks are at clearance. That's when these things are profitable for you to now go in and put big loads of money on it to buy it all up. That's what these big time investors do. That's what Warren Buffett does. That's what Tony Robbins does. That's what the guy I always mention on my channel, Dr. Boyce Watkins, does. They wait for these losses to put loads of money into the stock market and obtain, okay? The time for being a consumer, it's over. You're always consuming things. You're buying stuff. But you're not investing, because when you invest, you own. So you are a buyer of companies, and it doesn't matter the scale. You're like, well, I only own a fraction. You own, though. Understand, you own. So when this stock market goes into a bear market, right, and loses 20%, you can now get in on the glory. You can now get in on you making money, because it will bounce back. The system is designed for it to make money. And I am trying to teach you, I'm trying to advise you to be your own stockbroker, because stockbrokers are working for who? They're working for the house. They're working for the market. They're working for their shareholders, for them to make money. You're the little man, okay? How do they get their money off of you? And you're like, well, I'm still profiting. Fees, okay? Commission fees. 1% fee here, and a 2% fee here, and a 3% fee here. And you like, oh, only pay 2 or 3%. Well, 2 or 3% on the amount of money that you have in your investment account could be a large wad of money. Now, I'm going to get into compound interest later on another video, so watch out for that. But you have to understand how these things work, people. And you cannot panic. Do not make any decisions off your emotions. Don't make any decisions off how you feel. This is a money game. Now you're like, man, I don't play games with my money, man. You know what I'm saying? I don't play no games, bruh. But listen, it's a game. Some people are conservative and some people are aggressive. But at the end of the day, if you stay the course, you're going to win. Those rich people and their million and billion and $1 trillion companies like Vanguard. Vanguard's a $1 trillion company. They're not going to let the stock market fail. You know why? They're making tons of money off of you, the consumer. The only people who are making money are those companies and the people who invest in them. So when the stock market crash, when the stock market goes into a bear market, don't you get scared. Don't you have an emotional breakdown or a psychological breakdown. The problem is this. Every day or every 2 or 3 days, you do what? You go into your stash account. You go into your Robinhood account. You go into your Acorns account. You go into your Betterment account. You go into your Charles Schwab. You go into your E-Trade account. And you keep checking your investments. If you're not a day trader, stop. If you're not an option trader, stop. If this is for your retirement, stop looking at your account. Just because the stock market goes up and goes down a couple of percent or 0.5% or fractions of a percent means nothing to you. You should only be looking at your account once a year, and that's for adjusting and also rebalancing. Now, you absolutely have to look at it more than once. I would advise only looking at it every 6 months. Things don't change that often. Only the stock market and small percentages move up and move down anywhere from point something percent to 3%. Okay? Especially when it comes to losses. And even if you hear those tall tale signs of the markets in the downfall, don't you be one of those people who runs to their investment account and sell. The stock market is built on money. And the patient people are the ones who profit the most. You know who lose all their money? The impatient people. That's how the transfer of money goes. The impatient people sells their money because they lost $2 or $3, and then the patient people just buy it up. And then you look at it later, man, that stock went up $5, $10. That's what I used to do. I'm only telling you what other millions of Americans are doing because I was one of them. I'm going to tell you something, and it still bothers me today. I went out and bought 500 of Capital One. Okay? 500 of Capital One. When it was $4. Now, check the little timeline and see when it was $4. And I sold all of them because it went down to like $3 and something. Check how much the stock price is now. Check how much it is now. You know what? And every day for about a year, I pissed myself off because I used to look at that stock price and like, you are one stupid mother. That's what I did. So if you know this is for retirement, you know this is to take care of you when you don't want to work no more, then don't look at your money every single day. It's going to drive you insane. You're going to have a psychological breakdown. You're taking your mind and your body on an emotional roller coaster, and it simply can't handle that. Just stop looking at your account. Have it on auto investing, okay, in your ETFs or your particular portfolio in your stocks. You allocate a certain amount of money every month, and you just let it go. And you just let it go. Now, the only time you should be looking at it is when you're getting into individual stocks and you're trying to research a stock. So you're in that field, you're in that groove, you're doing your research, you're going through the analytical trends of a stock. Okay? That's when you start looking at things because you want to buy a few here, you want to buy a few there. But just stop looking at your account because it's inevitable, people. It's going to happen. Just be prepared for it mentally, okay? And then be intelligent about buying more stock. You're like, man, that's crazy. Why would I buy more stock in the stock market crash? They're going to be cheap. When the stock market crashes time, I bought some Goldman and Sachs. I sure did. I bought me some Goldman and Sachs, and I'm going to hold on to them. I'm going to hold on to them. You got to read your stock market news. You have to read all these indicators that stock is going to do well, and it doesn't take a long time. You don't have to be financial savvy. You don't have to be a brainiac or a genius. You have to just use what God gave you, a brain. If you can read, you can invest. If you have some sort of income coming in, you can invest. It'd be a damn shame if somebody's on welfare listening to this video, invest their welfare check or a portion of their welfare check in the stock market, and in 20 years have more money than you. That would be a crying shame. So the stock market will crash. Just be ready. Don't be scared. Hold fast. This is Ross World. My money makes money. I'm out.